Welcome, everybody. This is Chris J Snook, and if you're tuning in for the first time, welcome. If you're coming back, thanks for being back. We're going to do our weekly executive briefing here as part of the Smarter B2B series brought to you by Emerged. Today, we're going to be talking about possible winners and likely losers post COVID-19. And without further ado, we're going to jump right in. Again, thank you to Emerged for the sponsorship to bring this content to you for free. They are an independent AI-driven platform, redefining the sales process and customer relationship management, and you can check them out at emerge.com. Mention Decisions 2020, which kind of kicked off this series when you talk with Cameron, and they will not only assess fit, but also provide you some value in advance of any formal relationship as part of that assessment. So make sure you ask them for that, reference this webinar and Smarter B2B, and they'll take good care of you over there. Again, my name is Chris Snook. I am the author of Digital Sense. I've been an entrepreneur and an investor, an executive for coming on 20 years now. Spent the most of my time in the recent years in the emerging technology space. And you can chat with me during these webinars. You can send questions in both pre and post, or if you're listening to this on the replay, you can do that and it'll send us an email. Happily answer any of those online or offline or during these sessions as they come up. And feel free to get in touch with Cameron over at Emerge if you want to schedule any time with them. And so the logistics are out of the way, and let's dive into this week's update. We're going to talk about the impact, again, the fallouts. We'll get into some of the winners and losers. These are my predictions. And so I'll caveat this whole thing by saying I'm a focus group of one. Even my contacts and peers that I've talked to or futurists that I talk to and study or listen to, we're a focus group, or we're a focus group of one. So I don't know how accurate these are going to be, but I also believe that they are very likely. So we'll caveat it that way. You should not take any of this as investment advice. It is not investment advice. And anybody mentioned in this is merely for example, and not because of any formal relationship, and certainly not a financial endorsement or a push in any way. So we got the liability and the disclosures out of the way. We'll give you kind of some of the resources of where we've found some of this data, where we listen to and sharpen our own minds, and hopefully you'll check them out too at the end. And we'll look to wrap this up in a succinct amount of 28-30 minutes. So kind of where are we at today? So as of this morning, just over 2 million cases globally of COVID-19. You can see the numbers here. I know there's several different dashboards out there, but bottom line is we doubled from last week in the total number of cases. Now, there is some evidence that curves are flattening due to the extreme measures kind of taken by not only this country in the U.S., but also other countries around the world. And so we'll hope that continues. The debate rages on, and the politics rage on, and the geopolitical electioneer stuff rages on. And so there's all these different factors. So the takeaway message here as we dive into this is that whether we want to believe it or not, the impacts of COVID-19 that we're feeling today are actually going to be delayed. The true impacts of this are unprecedented, and they will be lasting. And regardless of when we reopen economies, they will be felt for years to come, both emotionally and economically, and I think also in society. And I don't think all of those impacts are negative, obviously, but there will be some that are. And so let's talk about those. We're seeing irrational market bounces still. You probably saw it today. I think Dow was down 700 right before I talked in. Yesterday it was up. The fundamentals haven't changed. The stories haven't changed. If anything, they're going in the wrong direction. Unemployment is rising. Stocks are rising. So obviously there's a disconnect between fundamentals and functional reality and technical analysis and technical trading, and that may persist for some time. Rising bankruptcies are definitely going to become more and more frequent, but they may play out over a multi-year period, not all at once. And bailouts have already started to begun, and obviously caused the polarities that exist around which ones are right or which ones are wrong. So you'll have that narrative kind of bouncing around in people's minds. Recurring waves have begun in Singapore and China. We're seeing cases as people have gotten back to work there in both dormitories as well as other things. So those recurring waves have begun. which I guess in some ways, hopefully, is good news for the rest of the countries that are considering when to reopen, either as a predictor of what to expect and how to make that judgment call on the lesser of two evils, or on maybe a justification for staying closed a little bit longer. Temporary permanent job losses continue, hiring freezes continue. I heard from a couple different Fortune 500 companies in the last 24 hours that freezes are on. So even though their LinkedIn's have hundreds of open recs, there's a freeze through Q4 at this point that recently got socialized. So I think that'll be the norm, or continue until some level of certainty happens. Cabin fever and impatience are already starting to rear their heads, but fortunately not in too much of a crazy way. We talked last week about anxiety and PTSD as a knock-on effect that we want to watch. We gave out some resources for that. If you weren't able to see that or you didn't know about that, I encourage you to look up the series on Google or on YouTube, and you can even find it on my YouTube channel for right now if you need to, and you can figure out where those resources are for mental health and things like that for your teams or your loved ones. There's an ongoing risk of double-digit defaults pending and looming. I think the fiscal stimulus delays are creating issues of their own, and hopefully will get sorted out here in the next week or so in this country. And again, worst of all worst, we have bipartisanship showing back up again because it's an election year. All right, so that's what's making us all crazy. Let's talk about the reason we're here, just to get a sense of the audience. Every week we kind of do a little bit of a poll. So today's poll, I'm going to fire up the first one. It'll be live here, both on the replay. You can answer it as well as right now live. They're all anonymous, and we won't be publishing these, but it helps us know. I will speak to them. So do you think the U.S. economy should reopen on May 1? Just looking for a level set on the audience and where they are. So yes, no, or not sure, your three options. I'll leave that up there for a second. They're starting to pour in. Looks like a pretty split decision. 40%, 40%, 20%, call it. So that's interesting. We'll go to the second one, which is, think about it on a personal level. If your state does reopen, will you actually continue to shelter in place voluntarily? Will you work from home still? Or are you mandated to still work from home? Will you school from home? Maybe some of you are forced to. I know here we've basically canceled the rest of the school year and are doing it virtually. Most states, I think at this point, even if they reopen, that's the case. But how you feel about it in fall. So that'll be the second one here. We'll give you a second. Let me fire up that second poll. All right, so that one should be live now. If your state does reopen its economy, and again, if you're overseas, you can answer this however you want to look at it, your province, your locality. But will you continue? Will you re-engage, but on a very selective basis, or is it binary for you? So we'll let that ride for a little bit so you have a chance to answer both of those. And it'll help me kind of contextualize some of this stuff moving forward. So I picked a couple of industries that we want to talk about this week. There's certainly a lot we could look at. Some data came in that helped me kind of center around four big ones and some gut level stuff. So auto manufacturing winners, again, not picking anybody's stock. This isn't about that. I think Tesla could be a winner on the backside of this, and I'll explain why. And they're indicative of the type of winner. Ford, GM, Jeep, Chrysler, BMW, Mercedes. There's going to be some kind of really bloody pain there, and essentially all their dealer networks. I just don't see any way out of. Over to education, I think winners out of this will be the homeschooling platforms. We'll talk about what that might mean. Top-tier online universities or top-tier universities that have a robust way to roll out both existing online programs as well as to maybe migrate degrees that have not been traditionally online into an online environment. MOOCs might take off both in the CEU world as well as in the corporate world, or in the trade school world. Cisco, Zoom, the underlying infrastructures that power the bandwidth or the interfaces of these likely to benefit. And then maybe not as direct, but as a opportunity. Things like Peloton, the fitness brand, launching some version of PE or family-based fitness for those schooling from home, I think could see some real traction. The losers would be things that have been there for a long time that needed a reason to die or fail or be repriced, and I think overpriced universities, which is every university, I think are going to feel the pain. I think the jury out still on the net negative or positive impacts of public or private school K through 12. I can't really see a clear line of sight, and I can make an argument to both. A revitalization of those public school offerings, and maybe even a better experience, because a percentage of people will choose not to return, which will then keep class sizes smaller by just the very nature of market forces. And so that could have interesting benefits for those who do return their kids to a brick and mortar school. And so who knows? That one's jury's still out, but it will be impacted one way or the other. Sports and entertainment, we're going to see winners in the esports, video gaming hybrids, VR and AR potentially over the next 5 to 10. Streaming platforms, obviously bandwidth providers. Fantasy sports, I think, could get more interesting and exciting, although in a different way. Losers, I don't see a way that movie theaters, sporting arenas, concert halls, casinos, restaurants, and bars associated and heavy dependent on pro sports traffic don't suffer. Even extend that maybe to parking lot owners. I was looking for some data, didn't find some great data yet, but I think these places that get $60 a whack, 82 games a year in downtown markets, they're going to have some differences to their P&L moving forward, especially if they're also sharing corporate traffic as a part of their main revenue stream, or conference traffic as their main revenue stream. Travel and hospitality, winners and losers. So potentially RVs and road trips making a comeback as people fly less in the interim, or can't afford to, or maybe have to get rid of their house. All kinds of things could maybe do that. The obvious ones, the sin brands of alcohol, cannabis, porn, things like that, obviously already winning, going to continue to probably win, which could have other negative knock-on effects, but likely from a business standpoint, they're going to continue to see traffic as people seek to escape in other ways. I think luxury travel brands or venues possibly could make a big comeback on the pent-up demand after people feel safe again, because I know, again, focus group of one, that in my family, when we do feel safe again, we'll cherish travel even more, and assuming the means are there for people to do that, I think they'll take advantage of that, and those brands may have a V-shaped kind of recovery, but the majority will not. I think there's going to be some devastating effects to commercial real estate values on the back end side of this that are just unavoidable. Then we'll see, consolidation everywhere else. So those are the summaries. Let's get into a couple of the details, and then we'll wind up. So why is auto DOA in its current and kind of historical business model? These are the numbers before COVID. These are the numbers coming into December 2019, so just before January. And obviously they don't look good, right? So when you look at a stat like this that says over the last 50 years, in thousands of units, we've seen this kind of rise and fall. So you had, a peak of maybe 11.5 million autos somewhere in the middle of the late 90s there. And then, 2019 was down close to the beginning of the mass scale auto ramp up in the 50s. That was before COVID. You already had a lot of downward pressure on auto OEMs and vehicle ownership in large, and you can't subsidize it anymore. We've not bought a car in 20 years because we've been able to basically just buy a payment. And, BMW sent out something yesterday that said 0% APR on everything used and everything else. I mean, you can give the things away. People still need a reason to drive them. And COVID-19 is making single car homes, much more viable as people work from home. They need one family car. Maybe they need something that's paid off in full. Maybe they need something that's used but reliable. I just don't see it. And so, why a Tesla could not only win but own the whole industry is not because they make electric vehicles. That's part of it, but it's because they're the only vehicle that right now at scale can be manufactured in a global market, and all at the same time be updated over the air, have a tremendously long shelf life because there's no wear and tear from a combustion engine the way that there is in other cars. And, all the autonomous driving stuff, maybe for a future out 10 to 15 years is interesting. But in the interim, one of the things that can easily be done is a subscription model because they don't have the dealership infrastructure to deal with. And so, when you get to a point where people do need to access vehicles at scale, not only in cities, but maybe in more rural and suburban environments, I could see $100 billion company just on subscriptions of Model 3s and things like that on a monthly basis where you pay for access versus ownership. And I don't see any way that the Cadillacs or the BMWs who've tried this on the luxury kind of side of their portfolio over the last couple of years with several different subscription models in urban markets, I just don't see how they catch up. And so whether it's Tesla taking all or something of that nature, the access and the mobility as a service play spells really well for a winner that is in Tesla's position. Education. 1.4 billion students have been forced to stay at home and educate at home. Now, many parents are cringing at the reminder of that on a daily basis, maybe even as you're listening to this and your little ones are in the other room and you're trying to figure out how to keep the day on track. But the reality is that I just don't see a future. And again, I'm disclosing this with I don't see a future. I don't see a future where when you've become accustomed to it at some level, when maybe you considered because of mass shootings on the rise or other things in years, maybe you've considered homeschooling, but didn't have the confidence or the impetus to maybe pursue it, or maybe it felt a little overburdensome or whatever. This whole COVID-19 forcing 1.4 billion students to stay home is creating, like everything else, out of necessity, innovative ways for parents and teachers to deal with it. School districts are dealing with it. Google Classroom has taken off in our local school district. There's other schools that never were down a day and never lost a beat that have up and running, that have brick and mortar and online versions already for K through 8, like IEG of OC out of Orange County. And they literally have had their full schedule, full day, full curriculum, full testing, uninterrupted, unimpeded, because they were prepared to do it. And they've built proprietary things that could be licensed or scaled out as a platform. I think that when the notion of my child can access the best curriculum on the planet, and I can have them at home, or I can be remote and work remote and travel and do that, I think there's a 10 to 15, 20% maybe percentage of this population that's been forced to do it that never goes back. Maybe I'm wrong, but it's going to be a significant number. So whether it's 140 million people that never go back, or whether it's 700 and some, half of them, I don't know. I just know that there's other things that are exciting about this to me as well, because I think literacy and access to education in places that don't have school buildings to begin with, but maybe now do have subsidized smartphones and mobility access. Now they can access the best students, the best teachers, the best curriculums in the world in an accredited way, and democratizes knowledge in a way that quite frankly is better for humanity. So education is one that really excites me. I think that it's a winner for those who can create the homeschools. And again, I think the losers are $40,000, $50,000 a year, student debt driven, government guaranteed, that is going to ultimately end up being jubileed. I see no way around that. College debt, that stuff's all dead. Let's talk the fun stuff, the things that we do with our downtime, who wins and loses in sports. Interestingly, this is data from last week that sports documentaries are getting the majority of demand. Classic games getting rewatched is number 2. Esports is starting to come of age. Obviously, we've heard about it. We've seen it grow. It's been double-digit growth for the last couple of years, but it's still nascent as far as a thing. And professional sport leagues are starting to pop up. But the reality is, no one has to tell me they need a stat to say that they or their kids have been playing more video games. And I think as those multiplayer worlds have already been in existence, they take on new meaning as it relates to quarantined community and access to engagement. And I think pro sports has to look at that and will be impacted by that when you look at some of this data. So hybrids like the FCFL or things like that could be really timely and benefit from these catalysts. colleges and universities and youth leagues will feel the pain, and then subsequently I think the hotels and the venues that support that activity will see less traffic, and so there could be knock-on effects. Fan engagement will shift. FCFL is a company that we found out about a couple of years ago, and is getting ready to take their league into a whole new venue. Could be perfect timing as you see XFL and the AFL and these other things that are specific to American football have failed in the traditional TV rights model with expensive venues and expensive players and expensive overhead. These models where you could have a real life avatar that's a human being, that's a good athlete playing in a 50-yard 7-on-7 field that's high energy, 60 minutes long, but where fans control everything from the naming of the team to the uniforms to the plays that get called on offense and defense through their mobile phone. And they're not required to be in a stadium, but they can have a stadium-like experience. And through Twitch, they can have a community and smack-talking experience. This kind of platform plays well into multiple different sports and could very well be the future of pro sports. And from an advertiser standpoint, starts to be really interesting, I think, over time when you see ad spend shift and need to be justified with pennies on the dollar and get the same impact. The metrics that you'll get through something of this kind of platform will rival and destroy any metric that you quantify through Nielsen ratings or other attention grabs. So watch out for a big shift in the way that platforms like FCFL or the technology underneath it impact real life sports with a video game kind of element. Definitely something to watch, I think, and that could be a big winner. Sports and finishing that up, more layoffs and delays are expected. I think pent-up demand will shift into new ways to consume it. You're never going to have a society without sports. We're not going to stop going to games, but I think we'll go to less games in the interim. I can't imagine myself taking my family to an NFL game as much as I love the Cowboys next year if they play at all in front of fans. We've already seen, on the opening slide, Taiwan baseball and the WWE this week played in front of no fans or cardboard fans. That's something that's a patch and a Band-Aid to keep things going. Obviously, I think the Olympics, will be well attended. Hopefully for the world, it'll be a coming out party in 2021 of reconnection. But there still will be a very selective basis by which people choose to engage in those kind of things for some years to come. And quite frankly, they may not even have the money to do it, because when you map the likely unemployment rate and the slow to rehire rate against the disposable income and then the cost of these things in their current state, I don't see a market where these business models can benefit or recover anytime in the near term. So again, lots of positives, but lots of short-term and potentially extended negatives. Travel and hospitality ultimately is, the shoe that everybody already knows is dropped, but 75.2 million estimated layoffs in 2020 just in the travel industry. You can see kind of where the biggest hit markets are, Asia Pacific being almost 50% of that, 6.8 million jobs predicted by in the North America market and just under 11 million in Europe. But these jobs, maybe they come back, but they come back based on the demand of the amount of cruises and the amount of things going. And when you factor in business travel, is going to be a very selective thing moving forward. It will return, but nowhere near at the level of justification it has in the past, because we've all learned how to be much more effective and productive in our days through Zooms and through Skypes or through whatever WebEx platform you use. And conferences and trade shows will begin to innovate and ride platforms that have been around as supplements for the last years and do things, I think, that through booths and through things like that are easier to justify and monetize. And again, all these things will impact hotels and conferences and airlines and everything in between. I just don't see a way out of jobs just getting hammered in these markets. and massive consolidations, and I don't think that's a short-term thing. But we will travel again, and until then, I don't know that VR-cations won't be fun and awesome. I also don't think there'll ever be enough. For those who don't know who Naval Ravikant is, I don't know him personally, but I've been following him for a while. I encourage you to follow him. He's a genius communicator and a very wise guy, and posts a lot of good stuff. And when I put this in here as the other side of this equation, which is no matter how cool going to Greece from home may be, obviously, going through a YouTube channel is just one way. It's like watching a show. But there will be some really cool ways to sit in your living room, put on a set of goggles in the near future, and be on a beach. You still won't feel the same heat. You still won't be on that beach. I think there will be a whole market that takes off for that, for staycations, things like that, family experiences, new things that we haven't even thought of yet that'll have their own escapism and convenience tied in that'll take off, and maybe even scale to the masses depending on the price of goggles and things like that coming down. I still think that just like schools aren't about learning, as Naval said last week, offices aren't about working, churches aren't about praying, and restaurants are about eating, and how obvious this is now that all these things have been stripped away from us. Travel is not about just seeing it, right? And so it's who you meet, it's who you go with, it's all those things in between, and the memories that get created that are really unique to the environment of who you're with and what you're doing. And so I don't think it'll become irrelevant, but it's definitely going to go through some pain before it finds itself. And ultimately, again, the most obvious loser to me in all this is commercial real estate, and then subsequently probably residential real estate. I think residential real estate, you can argue what happens there. It happens in every crisis. People default, people lose their jobs, they can't afford their home, they get evicted, they get moved out, the forbearance runs out. We're going to see that. That'll take time to work its way through the system. And we could, see property values do any number of things. And we could see mortgages get extended, and, they'll probably hopefully they'll peg the 30-year rate to something like 1%, given all these low interest rate, negative interest rate environments. And so you'll see maybe the millennials take advantage of that and buy their home, but people are going to buy less of a home. They're going to buy what they need. Not something they don't need, because they've learned to live with less this last couple months, and I think they'll kind of embrace that a little bit. And so I think you have a whole generation of people that do still move into a place and still do find some place. I think you'll see net migrations out of hot zones, whether that be certain cities or whether that be places that during this crisis handled it one way or became claustrophobic for folks in a way where they didn't feel safe. And the minute that the embargoes are lifted or that the things are lifted, they may net migrate out of hot zones and into talent areas or markets where they feel like if it happens again or when it happens again, they'll be more happy, they'll be safer. And the ability to remote work at scale, which we've proven is now not only a necessity, but it is possible. That'll become a new part of culture, not just because a generation of millennials was demanding it, but because a whole multiple generation of humanity has now lived it. And it'll be about talent and productivity and not about geo. And yet geographic areas will benefit from this. I had a graphic, I didn't put it in for the sake of size, that showed the states and cities that benefited most after the Spanish flu of 1918, that between the years of 1914 and 1919, the cities that quarantined the longest and didn't reopen their communities as fast benefited more. And it was an interesting chart, but essentially Los Angeles came of age during that time, and it shut down longer than San Francisco had, and San Francisco shut down longer than St. Paul had. And so some of the cities that have been highly dense from a talent and a capital formation standpoint literally came out of a quarantine 100 years ago where they were patient and they didn't reopen as soon. And so it'll be interesting to see who pays attention to that data and what cities 50 years from now have gotten the lion's share of talent and how that shifts the landscape. But the Empire State Building opened 2 years into the Great Depression, and it wasn't profitable or didn't break even on a cash basis until the 50s. So 20 years it took for that building to break even. Obviously, no one on this wouldn't mind owning the Empire State Building right now, but if you were the person who owned it in the beginning, it was 20 long years of pain and empty tenants. And I think that WeWork was just the beginning prior to COVID, showing the overvaluation of commercial real estate and commercial leases, the new dynamics of office life and home work life moving forward won't mean everyone works from home, but they also will mean that offices will play a different role for the company in the future, and retail around it and restaurants around it will be gone to, but maybe not every day. And so, what are we going to do with all the empty buildings? And who's going to anchor tenant when retail and a lot of brands don't make it? And what is that going to do for the commercial value of those real estate and the repricing of that? So these are the things to be thinking about as you plan. Takeaways as we wrap up. More is inevitable. We will do more. Human beings are uniquely wired to innovate. Necessity is the mother of all invention, and human beings have been through tougher times. This is a tough time, but we have always come out ahead, and we've always produced some new exciting way to experience more of life. And so more is inevitable, but less is also our new reality, both by choice and by force. We will learn to do less is more and cherish less is more. We'll be forced to do that as well. And better will be what wins. And so as a business owner, as an executive, as an investor, as anybody who's in the persona that's listening to this, better will be what wins. And so better business models, better customer experiences, better offerings at a better value, in a better and more sustainable way are going to be what come out the other end of this. And that will be evidenced over the next several months and years. Consumer values will be permanently shifted and refocused. There's no doubt in my mind that that'll be the case. We talked about hot zones being left and talent and shifting economic development impacts. COVID-19 may truly be the thing that, not to make fun of the Kardashians or the meme going around, but COVID-19 may actually be the thing that truly breaks the internet. New infrastructure and Web 3.0 fixing not only the business model, but also the underlying infrastructure and architecture of the web in its current state is being forced to the forefront now from both a security level as well as a bandwidth level as we consume more and more of it than we did before, and it's not ready for it. And so mobile and cable providers and infrastructure providers are rapidly needing to upgrade the infrastructure underneath this whole thing, and so that'll be an interesting one to watch. And you've heard about many colleges and universities will go bankrupt. I think that'll be the case. There'll be a massive consolidation in hospitality and travel across the board. Commercial real estate values may be depressed for decades or more once this all sorts itself out. Pro and college sports will need to reinvent the fan experience. Esports will begin to thrive and become more mainstream and maybe become the thing. Hybrids like the FCFL or platforms like it could replace the future of how people think about pro sports. Accredited homeschooling will bring best curriculums to billions of more learners, and everything will be okay, but it's going to be bumpy first. So thanks for tuning in. Send me your questions if you have them, and we'll see you next week.